We're going to do our market update right now, and there's a few numbers that we want to look at. Total sales, you can see that our total sales, most of the way through the last 6 months of 2025, we were at 15 to 20% in the negative year over year sales wise. You can see that numbers come down to just over 11. And to us, that's a good sign. That means as the sales were dropping and dropping and dropping and dropping all 2025, now we're starting to see that slow down a little bit. And we're hoping that that number will slowly turn positive again as we get through 2026. It may take the whole 12 months before that number turns positive again on the right-hand side here, but it's coming along slowly. The next thing we look at is active listings. They're still very, very high compared to last year. We're up 20% compared to last year, but that number was 25 to 30% at the end of 2025. So that's again more of a positive number, and any positive number in the active listings is very positive for real estate investors. That means there's more choice out there, and the more supply there is, guess what? That affects price. It makes our investors get better deals out there.
Yeah, and we're seeing personally some of our investors that have held on for 10 years. You may have got an email today reminding you about tonight's seminar, and I mentioned how Nico just made $150,000 off his Hendon Drive property in Highwood. Nico held on to that for 10 years. He just opened up a small oil and gas company just down on First Street, actually, not far from us. And he's pouring money into his oil and gas company right now, or raising funds for it. So we decided to sell that one. It sold within a week, close to list price, but he held on to it for a year, for 10 years. He bought it for $520. We just sold it for $545. The mortgage was getting paid down roughly $7,000 to $10,000 a year, depending during COVID. The interest rates went really down. So, he made over 150 grand just by sitting on the property. And so just talking about that while we look at this market update for 2026 to date, you know what? It's not about timing the market. A lot of people talk about this. It's not about timing the market. It's about time in the market. And the best thing now about investing in Calgary is that when the market did shift a year and a half ago, we've seen incredible prices in certain communities. And what I love about that, what it's teaching us, is that these communities will come back to that. I know I was looking with a JV partner today on doing a refi or renewal or selling a property in Miniport. And I know that same property during the peak, and we're talking a year and a half ago, went all the way up to 750,000. And right now it might be just below 700,000. So it's a good property to hold on to if it's cash flowing, and knowing that in a 3 to 5 year term, if we take on a new mortgage, that will get paid down even further. There's only $350 owing on it. And at the time, Tim, you remember when I bought it for $550,000. That property there, even Tim said to me, "Oh, you're paying a good price for this one," but it was immaculate. I mean, it was too good. It had Samsung appliances everywhere. It had a brand new basement suite. Everything was done. It was in between the lake and Fish Creek Park. So for me, I was like, you know what? It's a corner lot. I'm going to take it. And so for me, I know just by holding on to these properties for another 3 to 5 years, we stand to make another $200,000 just because of that, and because of knowing that the prices were once there already.
Yeah, so he may have got it at the high end of what we were buying at the time back when I bought it. But like you said, it's time in the market. It's a long-term game. So he holds on to that property for 10, 15, 20 years. Guess what? As that mortgage gets paid down, after 20 years, it'll be almost paid off. And the property value will be up, 800,000 plus. Mm-hmm. So that's a massive amount of equity just by managing a rental property.
So once again, you look at these numbers, they're up, they're down. I mean, you can't use it as an excuse. A lot of people use it and don't take action. It's not about that. It's about doing what you guys are doing right now, being on a call like this and understanding what real estate investing is all about. And it's about, as Tim said, time in the market, taking action, holding onto your assets, looking after them, looking after tenants, and just riding the wave. That's it. And Calgary is in a super, super good position going forward, just because of the affordability price point. We keep saying, you look at Vancouver, you look at Toronto. I don't know who wants to live there. Calgary is a great place to be, and it's just going to keep driving prices here.
Yeah, and if you look at the price increase there, we're still up 2.5%. If you looked, or if you listen to all the news reports, through the latter half of 2025, everybody was saying crash, crash, crash. Well, the prices did go down in the larger centers like Toronto and Vancouver, but they didn't crash. They went down a little bit, 5-10%. In Calgary, our prices are still rising in most segments of the market. I do have to qualify that in the condo market, prices have gone down because there's such an oversupply.
Yeah.
But overall, on average, Calgary's prices are up 2.5%, which is great. And with the economic conditions we're in right now and the trade uncertainty and all that, and our prices are still rising, we'll take that any day.
We actually had a meeting with Cody, I think he's on the call tonight, just the other day, and his question was where would you place your money right now? We would place our money on 50-foot lots, just good houses, and this seminar is all about legalizing basement suites. We would make sure that it's in a good area, so if you put a suite in, it's going to rent out, and just hold on to it. Make sure it cash flows, sit on it, and you would do extremely well.
Yeah, and looking at the prices on this graph right here, you can see throughout last year, the market really turned into a regular market. We see the bell curve right there, starting in January, going up, peaking in the summer months, and then coming down again. That's the inventory. And you look at the sales price, the sales, same thing. It went through the bell curve, but the prices, you can see, this is the benchmark price, which Krebs uses. The average price would be just a little bit higher, but it would follow that same curve. So the red line is the benchmark price. Goes through that bell curve. We've already reached the bottom and we're going up again. So Calgary's market is getting towards balance. We say it's balanced right now, and it's turning more back to normal. We're past the pandemic. We're past the oil upsets. We're past all of those things. Calgary's market is back to normal, which gives investors a lot more certainty when they're doing the numbers and working out what their properties are going to be worth in the future.
Yeah.
So that's our real estate market update.